daily outlook for Wednesday, July 8th. You can see that yesterday expanded lower inside of the range. I opened at 50% of the inversion level here, expanded lower, but it's still proving to us that price is high resistance, right? Because look how it closes. Doesn't have a strong closure here, right? It leaves a rejection block behind after trading. Right here, price is high resistance here. There's a lot of daily wicks, even more lower time frame wicks. But most importantly is trading inside the range of an order block here. Right, because again, looking at the previous monthly range, which you know is a consolidation, I can see that right to 25% of the range there's a bullish order block. At 50% there's a suspension block, and in premium there's a bearish order block. Right, currently price is technically trading inside of this range here, although there's, right, it's a range inside of a range here. But you got an order block in premium, an order block in discount, and an inefficiency right in the middle. Again, you can see that price is not even able to trade to 50% of this order block. Every time it trades to the upper quadrant, it holds. Right. We can look at it here from the 1 hour chart. Right, you can see that every time it trades into it, that it holds. Yesterday was the same scenario. But you know, there's relative equal lows inside of the range, and right below those relative equal lows there's 50% of the daily discount order block. So you know, at the moment price is rallying here from 25%, but say this ends up failing, I'd say maybe trades to these highs, or you know, well, we'll look at what's on the lower time frames here, but right here there's a bearish order block, there's a large wick, fair value gap. Alright, and then trades lower from here, and say New York is trading around, or you know, is looking to head into that direction, then it wouldn't surprise me if price would reverse from there. Right, looking like a New York reversal profile. But if coming inside of New York, that price has inversed this, right, the rejection block, the fair value gap, everything located around 50% of this range here, then very likely I believe that the current weekly high would be the drawn liquidity for the day. But obviously it doesn't mean that it will trade to 50% and necessarily will hold, right? I'm just saying that it would be, well, it's just a personal preference that I would have in terms of a daily profile. But price could obviously displace this level, right? If it's looking to trade lower on the, I'd say the range low here, and start trading back inside of a weekly or a monthly level, right? And this, we would then look back at the range of the 3-month look back. Now the 3-week look back yesterday, that has expanded lower, but ended up rejecting, leaving a large rejection block behind. This happens after trade at the previous weekly low, also creating a divergence with the S&P 500. Again, overall the range here is very high resistance, as we saw around the order block. So to me it's going to be important, if price will trade higher, to see this fair value gap here being reclaimed. This is the fair value gap located at 25% of the previous weekly range. So this would become a discount PV rate in case of a market maker buy model here, right? If not, right, there's a BPR through this range. There's a large wick here, which is a bearish mitigation block. Price could simply trade to these levels and end up rejecting lower. Right, and then from there, right, if this is the opportunity provided for the New York session, and you're able to trade short, you could trade short into, right, the relative equal lows, 50% of the daily order block, right? Or, if you believe that it'll trade lower, you could at least take some partials there, which would be a good level, because if it rallies into it in New York, I do suspect that it could become high resistance, right? So trade into it and reject. Well, high resistance for the idea of a sell profile here. Again, price is still consolidating here overall from a higher time frame perspective. Right, and right now it's traded inside discount, it's made a divergence, it's respecting the discount order block of the consolidation. Right, so to me it wouldn't make sense to see price trading back towards 50% or even premium of the range. So I do think this will be a pretty important level for today's daily profile. Very important to see how it's treated going inside of New York. Right? Everything that it doesn't here will be important information to figure out what the daily profile is, or at least for the New York session profile. Fair value gaps, order blocks being created through these levels are always important. Okay, I think we can look at the 3-day look back, right? So we look first at the phase of price delivery. Price comes from a New York reversal, which is currently the range high here. So expansion, eventually from the open of Monday up until the closure, from the open of Friday up until the closure of Monday, price delivered as a swing to Z, right? So consolidation, reaccumulation back inside of the range. And yesterday ended up creating a classic sell day, right? Open, expansion, reaccumulation, expansion. Right, and now, well, the answer for today's profile will be price comes from expansion, right? So will it reverse? Will it retrace? Could keep on consolidating for all that matters here, right? Overall, we're trading. Right, again, we're trading near the range of that order block, and price has proved to always create high resistance delivery so far around this level. Okay, we can look at the range. We can grade the range. Well, actually, I prefer looking at this range here, because overall it essentially aligns with the range of the previous daily profile here, but it's included with the reversal. Right here, the reversal was the 4-hour candle of Monday being a reversal profile. Because this is an intermediate term high and this is an intermediate term low. Right, so this currently the dealing range that we're trading for the daily profile here. Okay, so you can see that 25%. Right, so in discount there's a bounce price range. Price so far has expanded through this range. At 50%, there's a bearish order block at 50%, but I do prefer simply the wick of it since it has a large wick. And then in premium you have the previous daily open, and then you have a range high. Right, there's obviously here the range is pretty high resistance here. Right, so if New York opens around these levels, could lead to consolidation or or retracement to trade higher, or reversal, for all that matters. Okay, so, but I do prefer still simply analyzing this level maybe. Right, like if I'm looking at this chart currently, price. Well, the thing is, I have to include inside of this analysis the discount level, right, to be able to create a range. Right, because so far price is in discount, and it's proving to create an expansion away from the upper quadrant of the daily order block. Right, and now inside of the range, the previous daily range here left an order block right inside. Right, this is the consolidation that was preceded by an expansion. Right, and then New York opened and expanded lower. Okay, so if price claims this range, then very likely we'll want to trade inside of, if not the weekly high, right, at least trade inside of a premium level here. Maybe say the range of bearish order blocks that are here. Actually, even looking at this range, right? If you say, okay, let's just look at the previous daily range. Right, obviously we saw here the bounce price range. We saw the wick here that's located. This is the wick of a bearish order block. In premium, there's a SIBI, but we saw there was a range of order blocks. Right, the range is pretty low resistance here. But there's a breaker right next to it, right? So again, if New York will open inside of these levels, just watch out, right, for a consolidation. I'm not saying it's going to reverse, but simply it's going to create high resistance, right, to then expand higher because it's opening inside of a premium array. What I wanted to show actually was right through 50% here. If you look at what's on the left side of the curve here, there's an old bullish order block, right, and this is related to the formation of the low of day for the daily candle of Monday here. Right, and you can see that this level is what created the bearish order block at 50% of the previous daily range. You can see that it has a large fair value gap through it, and you can see that it has an intermediate term high also at these levels. Well, yeah, this is essentially an intermediate term high. I mean, it filled 50% of the fair value gap. So if price will trade higher, essentially if New York opens above these levels, then my draw on liquidity will be the highs. If not, I'll look to close my trade around the range of order blocks, which is basically the previous daily high here. But if this level is still used here as a breaker, then the draw on liquidity would be at first 50% of daily bullish order block, and then if the profile of day still aligns with a sell profile or a reversal profile, whatever the profile would be, then it would be targeting 75% of it and then the low of it, right? Because overall, price is high resistance because there's a large wick here inside of the range aside from the order block. Right, so I was looking at this specific order block. I like that it's essentially located right at 50% of the range, right? To me, it should tell me where the drawn liquidity is, all depending on the reaction around this level. I wanted to look at this also. Right, so far price is trading inside of this market maker sell model. This is in the case that here, price will end up rejecting at these levels, right? Create a turtle soup and end up trading lower. Well, then I'm going to be interested to see how it trades around this range of standard deviations, because this aligns with the daily bullish order block. Right, you can see that if price currently is right, it will not be reversing this range here, will be continuing the sell model. Right here it's left relative equal lows behind, and overall there's an intermediate term high at 50% of the previous daily range here. So price could end up projecting here, right? But then it's going to be interesting to see how it trades around this range, right? Because for all it matters, right, we have a range high, a range low, but we also have an internal range here, right, being this high and this low. And so far this low has been swept. Right now price could either displace this level or reverse this level, right? If it were to do so, reverse here, well, this would create a double purge, right? And then price will probably continue to act this way when it starts trading inside of discount, in my opinion. Okay, so overall recap: discount level, the range of the daily bullish order block. If a sell profile is presented, I want to be targeting 50%, 75%, and or the low of it, right? All depending on the daily profile. And in terms of a drawn liquidity for the buy side, we saw that if price is able to reclaim here a bullish order block inside the range, is able to create a breaker here, right, something like this, then in that case the drawn liquidity would be the previous daily high, right? And then if the daily profile is obviously a buy profile here, say this, the low of the day is already put in here, right, there was a divergence, then in that case you could be targeting daily highs inside of the 3-day look back, right? So we'd be looking at the current weekly high, and we'd be looking at the intermediate term high inside of the range. This is essentially the setup that I'm going to be keeping coming inside of right, my pre-market analysis coming inside of New York, and I want to see how, well, what price did around these levels, right, coming inside of New York, and from there I have to take a decision as to, right, decide if my drawn liquidity will be the previous daily high or will be the quadrants of the discount PD rate. Okay, so I think that this covers it for the outlook, so good luck and good trading.